number one. Number two, financial statements is essentially everything I've been talking about as far as making sure that your accounting records are complete and accurate, and that you are recording information at your expenses, and that you even have a financial system, right? Because on top of that, you have to have financial statements. You should. Now, I mean, you can generate some manually, but again, I say it all the time, nobody's doing that in this age and time. There's just too much data, and plus we're trying to save time, energy, and money. So doing all that stuff manually is not best practice. So then also in that recording and the accounting of your financial records for your business, then you want to make sure that they're complete and accurate. And one of the best practices in doing that and getting that done is going to be reconciliations with the bank, with third-party statements like a credit card statement, ensuring that you agree with the bank and that the bank, your financial statements at the end of the day with the balance sheet and the income statement, that they are matching with your bank statement. Finally, compliance and laws. And one of the primary things, because it's always a big expense in any business, is going to be payroll. And that is huge. So if you got that part down, which a lot of people, I've seen it where it's like, okay, that's not how you really report the payroll. But nevertheless, if you get that system down and you understand how that should be reported from a journal entry or payroll liability standpoint, then you should be fine, because that is a prime factor, because that is where most of your money is spent in small businesses. And that's where I talk about the third-party statement. So if you use any kind of payroll software, they're going to give a statement, or they're going to have reporting capabilities in that financial system, payroll system, and the auditor is going to say, okay, pull that report from that system and let me see if it matches up with your financial statements, period. I don't care if they are, manual financial statements or whatever they are, they need to match. And the best way to do that, of course, is with financial statement or financial system. Like I've already said, that there's a tool. Financial systems are tools, and they should be used to save you time, energy, and money, number one. And number two, for just general accuracy, right? It is going to save you more time. The other thing about compliance laws is contractual obligations. So you have a contract with, say, someone, a local or state government, and they've given you money or a grant, as an example, then the auditor is going to ensure that your financial systems, and not only that, but like your revenue and your expenses, match what the contract says. So if the contract says we're going to give you $100,000 and 50 of that can be applied or used for payroll, then they're going to look at your financial system and see if the payroll records match that information, and then the rest or the remaining of the $50,000 went against program expenses. That is what a contractual obligation is. That's an example. All right, so with that, I am going to stop sharing my screen. jrambus.com. Book a advisory session if you have any concerns about auditing. I say I am the perfect audit accountant. I've been in, a lot of perfect audits, and been the manager of that, and or on the team, controllers, and we know how to count the bag, number one, the best practices for that, and then with the result of perfect audits. So jrambus.com, schedule me, and I will see you on the other side.